bell moments away. Keith Fitz-Gerald joins us with just a couple of minutes to go. He says this rebound has to be solid. It's got to be now. To tell us what's behind his urgency on this. Keith is next. Well, that's a nice rebound, isn't it? Up 250 for the Dow this Monday morning after a 500-point drop on Friday. Keith Fitz is with us. Keith, you say this is a critical week for the markets, that if there's going to be a rebound, it's got to be now. Why the urgency?
Because the narrative is right on the razor's edge, Stuart. We cannot let the bears have control like they did on Friday if this economy and if this market is going to continue to power forward. It's very important this week, above all else, as we come into the summer months, that we really gain a bid and we see it go forward, because we've overcome fears of the Fed. Now we need to get back down to business.
Well, the implication is that if we don't get a solid rebound starting this week, and it's really solid, then there'll be a major league sell-off. Is that what you're saying?
Short term, yes, but does that disturb my optimism for the long term? No way. That never works. History shows very clearly you always have a sharp rebound after a period of maximum angst. So I'm keen to use that to my advantage if I get the opportunity.
Wait a minute, Keith Fitz. I go back to the 1970s. I remember what happened after 1973. There was the nasty oil shock, and the Dow, the stock market, did not recover for 10 years. How do you know that we're not in the same situation now?
I don't know beyond any shadow of a doubt. However, what I do know from history is even during that 10-year period, stable stocks held up well, dividends continued to pay, you set up growth into the 80s, and you did just fine.
Susan here does not remember this, but I think the Dow first went above 1,000. I think it was 1972, and it didn't get back to 1,000 until 1981, 82, something like that. But look, I've got a few seconds left, and you like McDonald's. So tell me why you like McDonald's and where that stock's going.
Quintessential growth, $6 billion, good dividend, 2.25%. Introducing technology. It's not about hamburgers. Earnings are growing faster than profits by roughly 2x the next 5 years.
Is it the outstanding food vendor of the day?
In my mind, yes, it is. And there's going to be a little dip coming up as people adjust to the Fed. But you know what? In the scheme of things, that's not much.
Where do you think it's going?
You know, I'm looking at $300, 12, 24 months from now. I think it's going to be a nice run.
Okay. All right, Keith Fitz, you've made your mark this morning. Thank you very much for joining us.
Thanks, Stuart.
We'll see you again real soon. Look, we got about 50...